prepare a comparative balance sheet of PQR Limited from the following information. Now students, again we are given two balance sheets, one for year 2002 and the other one for year 2003. The information includes share capital, bank loan and current liabilities, and on the asset side we have fixed assets, investments and current assets. Now the format is same, comparative balance sheet of PQR Limited as on 31st March 2002 and 31st March 2003, assuming that the years were closed on March. Now students, we have particulars, previous year figure, current year figure, absolute change and percentage change. Coming to sources of funds first. The sources of funds include owned funds or owners' funds. Owners' funds are the funds that are supplied by the shareholders because they are the actual owners of the business. So they include share capital and reserves and surplus. But in this case, reserves are not mentioned here. So share capital is 8 lakh and this is 10 lakh. Absolute change would be 10 lakh minus 8 lakh, 2 lakhs, and the percentage change would be 2 lakh divided by 8 lakh into 100. That comes to 25%. Then we have borrowed funds. Borrowed funds means funds that we have taken on credit from outside. They include secured and unsecured loans. Now in this case we are given bank loan, which is a long-term liability. Usually banks give credit on certain security only. So most of the time bank loan is a secured loan. So we will write it under the heading of secured loans, that is bank loan, which is 6 lakh and 9 lakh. The absolute change is 9 minus 6, which is 3 lakh, and the percentage change would be 3 lakh upon 6 lakh into 100. That comes to 50%. Now students, owners funds is A, borrowed funds is B. So total funds is A plus B, which is 14 lakh for the first year and 19 lakh for the second year. Remember students, you can always write it as total sources. So the absolute change in this case comes to 5 lakh and the percentage change can be calculated accordingly, that is 5 lakh upon 14 lakh into 100. Now continuing, the total sources we had calculated were 14 lakh for the first year and 19 lakh for the next year, that is the current year. The absolute change is 19 minus 14, that is 5 lakh, and the percentage change would be 5 lakh upon 14 lakh into 100, which comes to approximately 35.7%. Now students, we have calculated total sources. Let us move on to applications of funds, that is applications. The first application is in the form of fixed assets and we will name it as P here. The fixed assets for the first year are 10 lakh and for the second year they are 15 lakhs. The absolute change would be 15 minus 10, that is 5 lakh, and the percentage change would be 5 lakh upon 10 lakh into 100, that is 50%. Then investments, we'll name it as Q here. Investments for the first year are 2 lakh and for the next year also they are 2 lakh. That means there is no absolute change. 2 lakh minus 2 lakh is nil. So there would be no percentage change as well. Then we come to the next part, that is current assets. The current assets for the first year were 8 lakhs and for the second year also they are 8 lakh less current liabilities, which for both the years are 6 lakhs. So 6 lakh and 6 lakh here. On deducting, we will get net working capital. Net working capital. And this is difference of these two, that is 8 lakh minus 6 lakh, which comes to 2 lakhs. And in this case, it is 8 minus 6, which is 2 lakhs. This total we can put it as R. Let us calculate the percentage change and the absolute change for these figures. For current assets, the figure remains same, that is 8 lakh for both the years. So absolute change is nil, percentage change would be nil. For current liabilities also it is nil, and for working capital also it is nil. Now let us calculate total applications. Total applications in this case would be P plus Q plus R, that is sum total of these three values, that is P plus Q plus R, which for first year is 10 lakh plus 2 lakh, which is 12 lakh plus 2, that makes it 14 lakhs. For second year it is 15 lakh plus 2, that is 17 plus 2 again, that makes it 19 lakhs. It ends it here, and we can see that the total applications and the total sources that we had calculated earlier, this 14 lakh and this 14 lakh are same. The absolute change would be 19 minus 14, which is 5 lakh, and the percentage change would be 5 lakh upon 14 lakh into 100, that comes to approximately 35.7%. So students, you can clearly see that in comparative balance sheet, what we are doing is we are calculating the percentage change of various values, that is various assets and liabilities, in the form of sources and application of funds, and actually analyzing what is their percentage change over the relevant previous years.